Now on PowerOptions, we have the perfect tool to satisfy these needs. But the first thing I want to take a look at is one of those 4 stocks I mentioned, MMYT, Make My Trip Limited, currently trading at 60.28. As I mentioned earlier this week on the 13th and 14th, I was looking at entering new positions and I was targeting 4 stocks. MMYT was one of them. Trex with the other, which we did enter for the Fusion subscribers at radioactivetrading.com. Urban Outfitters was another potential one that was there. And also there was a 4th one that I just forget off the top of my head. I apologize. This particular position has been on a consistent rise. What I like about this position and what Ernie likes about this position, or would like about this position, if you're talking with him on a coaching session, for example, one of our long call and long put default searches is the Bollinger Band breakout. And what you're seeing here on my preferred chart is that the yellow line here, this is our SMA 20. I've got the Bollinger Band selected, upper and lower. I've got the MACD selected, and I usually have the RSI and the volume there as well. The Bollinger Bands here, a Bollinger Band breakout is looking for positions that have broken above the upper or lower Bollinger Band, but broken above the upper Bollinger Band and then closed above it the following day. MMYT showed a great Bollinger Band breakout back in the end of January. There's typically a little hesitation on it after the breakout, but then you start to see consistent movement upwards. That's what we have on the default search. The long put default search is looking for the opposite. It's looking for a Bollinger Band breakout down to the downside in that case. But a few days ago when I was looking at this position, it was trading right at about 58, 58.10, 58.20 when I was looking at the position. And as we can see now, MMYT is trading at about 60.28. Well, that's not necessarily a large rise. We had a much larger rise here. The stock had moved in the last 20 to 30 days or so from $50 up to $60. Let's take mid-range. Let's say that back in time, we were able to get into this position, MMYT, at about $54 per share. Right here at the beginning of February, end of January, January 31st, for example, we were able to get it at the good price of the day at $54 even. Now the stock's trading at 60.28. It's up over 10%. What are some of the options that I can do to lock in profit on this position? Well, I could just sell a call, reward myself for picking the right stock, cap the upside, convert it to a covered call, generate $1, $1.50 or something along those lines. I could sell half of it, pocket that $6 profit or so that I have right now, lowering my cost basis on the remaining 50 shares, remaining half of the shares, down from 54, of course, to about, $55, $56 per share. Or I could protect the position by buying a put option because I want to stay in the stock longer to have no risk on the position with potentially maybe earnings coming up or fear of a volatile market or a sell-off going forward, even though I want to stay in this position longer term. How would I look to do that? Well, we're going to go back to PowerOptions. Under our Married Put tab, we're going to click on the Insurance tool. The Insurance tool is a real quick and simple tool, but we want to apply some extra technique into it. All this tool does is want us to put in our stock symbol, MMYT. We're going to put in our cost basis if we got into the position at $54 per share back around January 29th. Now, I currently don't know the expiration dates, all of them off the top of my head, so I'm just going to leave the buy put month at all expirations. In that brief moment, what this tool did is grab for me what is my current unrealized profit on the stock. We're up $6.28 or 11.6%. And then what it did for us is it took a look and did the computations of all of the available put options for MMYT, showing us what would our midpoint price be to buy the various strikes and the various expirations. March 15th, 28 days out in time. April, 63 days out in time. May, 91 days out in time. strikes of 70, 75, 65, more in the money at 80 and so forth. But based on our original cost per share of $54, the new cost of the put, what is our new total cost basis, knowing our guaranteed exit, what is our new locked-in profit, meaning guaranteed profit no matter what happens. The stock could fall to $2 per share, and we're still guaranteed to make 10.4% on the position. Positive locked-in profit on this tool means guaranteed gain on the position, a bulletproof position, meaning that if I chose to do this March 70 put at $6.60, going forward 28 days out in time, the worst case scenario is that we'll profit 10.4% with right now having what? An unrealized gain of 11.6%. But now at the same time, we do have potential for further upside profit if the stock continues to move in our desired direction and exceed our expectations. Now this looks pretty powerful. Almost locking in 90% of my unrealized gain for the next 28 days, whether I have earnings coming up, some other event coming up, or fear market apprehension. But is my expectation really the stock's going to move up another 10 points to be above 70, move up to 71, 72, 73, $74 per share, where I'd receive more than the 11% profit I could have right now, 11.6%, excuse me, if I liquidated the position today? Maybe not. So in addition to the concepts, yes, I want to be in the money, but maybe I don't want to go too far in the money. Maybe I want to focus more on the 60 strike, 62.5 if there's one, 65 strike, still within the current price to have some unlimited upside profit potential in the reasonable range of expectations. The stock may be trading at 63, 64, getting more than the locked-in profit I have. But also maybe I want to have a locked-in profit beyond 28 days, following those three core principles we just discussed. So now that I have the expiration dates in front of me, let's go ahead and see what our August series offer us. Although it won't be as high as the 10.4% for the nearer term, lower time value per day at 32 cents. But I want to stay in this position. I want to continue to trade it even if I'm assuming market volatility. And I see here that, yeah, going to the August 70 put, I can lock in about half of the unrealized profit I have, but have 182 days of insurance in place with a guaranteed profit of 5.5%. Also, the availability to do other adjustments, other income methods to continue to lower my overall cost basis on the position, increase my bulletproof status, and increase the guaranteed return on the trade and guaranteed upside profit potential. Now, although it's not as high as I'd like, I think the 70 is too far out of the money with the stock now trading at 60.28, too far in the money. I still want to pick a reasonable strike. The 60 put is a cheap price at 630, but it doesn't bulletproof the trade. I'm going to target the August 65 put. Yes, it's going to cost me $905. It's going to increase my cost basis to $63.05. But I have a guaranteed exit of 65, meaning we have a locked-in profit of $1.95 or 3.1% for the next 180 days. And that's the worst case scenario. If MMYT falls to $5 per share, $20 per share, $30 per share, we're still guaranteed to make 3.1%. But what did we talk about our three core principles? Well, the three core principles, of course, we've already applied two of them. We're forcing an ideal size trade. Can't get any better than that. Locking in some profit on the position for the next 6 months, guaranteed return of 3% in the worst case scenario. We took advantage of the at the money bell curve. We went slightly in the money on this position. As we saw, buying the 60 put or buying the 55 would cost less, but we'd still have potential for loss on the position if the stock reversed. I wanted to get into that bulletproof status of the negative risk and the guaranteed profit. So we're staying slightly in the money. By the way, this is probably the put that I would purchase on MMYT today. If I went in fresh and bought the stock at 60.28, I'd probably be targeting the August 65 or that further out one we saw at 200 days out or 270 days out in time, maybe the 65 strike to start the position new. And then the time decay or radioactive decay curve. We're up here at 180 days out in time. I want to be selling here. We're buying out here with the in the money and the out of the money range. Really, for the put, we're buying the in the money range to get that better risk protection and bulletproof status in this case. While at the same time, we're giving ourselves 180 days of guaranteed profit no matter what happens.